Good morning. This is Mayor Valensky with Driving Markets. I hope you're well. So once again, welcome to all of the new listeners on Instagram and on YouTube, and also I'm posting on LinkedIn. Let's just give you a quick wrap up and summary of where we're at with driving markets. Okay, so this week you've got a pretty subdued week. Remember, the first quarter started on Friday, and this week the most important factor you've got is the minutes of the FOMC meeting. The FOMC meeting is the Federal Open Market Committee meeting, and the minutes will give you a lot more detail on what happened at the last meeting back in March. Right, this will be an indicator as to what really the actual members of the FOMC are thinking about interest rates. Remember, in the first quarter, they started off saying, we might increase interest rates by 2 or 3 times this year. And that jumped to 4 or 5 times, and now it's gone up to 6 times this year. And even comments by Jerome Powell that they're likely to increase interest rates in between meetings. And they're talking about 0.25%, 0.25% rise. However, due to the fact that Russia invaded Ukraine and the price of commodities shot up, and also you had the price of oil go up, the price of gold go up, the price of nickel go up, and all of the base metals, oil production went up. The Fed came out and said, you know what, there is an indicator that we might be increasing interest rates by 50 basis points. All of that, I'm stopped in traffic, so there's no hands. All of that was based on the fact, all of that was absorbed by the market. Said, no problem. We understand there's going to be interest rate rises. We understand that there's going to be maybe in between interest rate rises. We understand there's going to be 0.5% interest rate rises, and the market stabilized because it got information on where we are at, what the Fed is likely to do. But that was in the first quarter. In addition to that, a lot of companies came out in the first quarter and beat analysts' expectations, and that gave great support to fundamental shares that make up the Nasdaq, like Apple, like Microsoft, which is 22.5% of the Nasdaq. Tesla came out great reports. Amazon came out with great reports. Google came out with great reports, etc., etc. So you have a lot of companies came out with absolutely fantastic reports in the first quarter. So even though interest rates were a threat, the companies reported good, solid profits. This quarter will be a real acid test as to where we're going in the rest of the year. And I think this quarter you will see a significant increase in inflation. I'm just stuck in traffic, so don't be afraid. So I think we'll see a significant increase in inflation. I think the commodity prices and all of the wheat, the barley, the soft grains will feed into the economy, and you'll have a big jump in inflation. And therefore, I think the FOMC, which is the US Federal Open Market Committee, and the Europeans and the UK are behind the curve. I think they're not doing enough to curb inflation, and I do see them getting far more aggressive regarding interest rates as we go on. Just be aware of that. If we noticed last week, twice on Tuesday and on Friday, the 2-year Treasury note and the 10-year bond became inverted. That means that the yield, the amount of return you get on the 2-year was greater than the return you get on the 10-year, which means that that is an indicator that the economy is going to go into recession and go into a bear market. However, that needs to happen for a 90-day period. It's not an indicator if it happens here and there. And last week was here and there, so it's not a solid indicator on that basis. It needs to be a 90-day period where the 2-year Treasury is higher yield than the 10-year Treasury. Last week I also mentioned that Joe Biden released, or is willing to release, the strategic oil reserves of the US at 1 million barrels a day. And one of the viewers wanted to correct me and said, Mayor, this is not the first time which is done, because I said it's the first time in history. No, I said it's the first time in history that 1 million barrels a day would be released. That quenched the thirst in the oil market, and the oil dropped. Furthermore, Europeans and other countries came in and said they're also willing to open their emergency reserves in order to alleviate the demand on oil, increase the supply, and that pushed oil down to below $100 a barrel. Well, that's great short term, but longer term, it's not going to help. It's like a plaster over a gaping wound. There is a massive shortage of oil around the world. There's a big supply shortage, and that's pushing the price up. And oil will go back up to $150 a barrel, even higher. Be aware of that. So those of you who have a Tesla or electric vehicle, you can drive with a smile on your face, because oil will be going back up. So the consumer will feel the pinch on that, and that again will be fed through to inflation. You've also got house builders and home sales. Now, home sales are on the increase due to the lack of inventory, due to the lack of actual supply on home sales. However, interest rates have gone up across the board. In the States, a 30-year interest rate is the highest. A 30-year interest rate mortgage is the highest it's been since 2018. It's running at 4.8%. So the demand for home improvement loans has dropped. However, the demand for mortgages and houses has gone up by 1%, which is a good indicator and a healthy indicator to the housing market, because there's no supply there. So be aware that as interest rates rise, the demand for purchasing houses should drop. But because of the lack of inventory, that might maintain the value of houses over the next 6 to 8 months. Be aware also that you've got quarter results coming out. The new quarter started on Friday, so going forward from next week, the week after, you can have some of the majors reporting in financial markets. That'll have a big impact. Another point is, as interest rate rises, you're going to have an effect on currencies. If interest rates continue to rise in the States, the dollar is going to get stronger. So it's going to be sought after by all investors to buy into the dollar based on an increasing rate environment. That's it for now. You can contact me on LinkedIn, under Instagram, under Driving Markets. You can contact me on WhatsApp, on YouTube, on Twitter. This is Mayor Walensky with Driving Markets. Have a good day.